Hello everyone, this is Kathy Lean with BK Forex. The Russian invasion of Ukraine began just as I left for California last week. Knowing the potential impact of war on the financial markets, I left you all with a video on what to do when conflicts brew. There were three main ideas. Number one, investors sell first and ask questions later, so expect swift, aggressive, and durable declines in risk currencies. I said that the Japanese yen and the Swiss franc would perform well along with gold, because gold always rises in times of uncertainty, and that's exactly what we saw. Number two, trade with smaller positions and bigger stops, because uncertainty begets volatility. Number three, fade the rallies until it is very clear that the Russian troops are scaling back. The worst may be yet to come. Now, we put some of these ideas into action when I returned to the desk last week. Profiting when so many people are suffering is not something that I am proud of, but I have a job to do, a business to run, and members who look to me for trade ideas. Rest assured, I've also been spending a lot of time looking for and donating to causes helping Ukrainian families, particularly those with young children like mine affected by the Russian invasion. But back to trading. My first tip was to expect bigger, deeper declines in currencies. We did that in a few different ways this week. One of the first trades I took when I returned was to sell Eurodollar. Why? The Eurozone is the most sensitive to the slowdown in Russian growth and the sanctions wielded on Russia. Nearly 40% of the gas and over 25% of the oil imported into the European Union is from Russia. The loss of this supply combined with rising costs would hit the Euro area and the UK for that matter harder than anyone else. We had the perfect Eurodollar zip sell signal at the start of the Asia session on Sunday, like you see in this chart. It's the first arrow. The signal came at 5 p.m. I started trading at 8 p.m. New York time on Sunday, so we didn't get in until a bit later. But, that was the right move because it did retrace a bit before it continued. The profit was small. Only my first target was hit where it says T1. But we sold euros again on Tuesday night, Wednesday morning for Asia. Got out for some quick profits because I was bullish German CPI. We did not trade on Wednesday because Powell was delivering a semi-annual testimony, and it wasn't clear which way he was going to swing on inflation versus the war. But we did return to selling euros on Wednesday night, Thursday morning in Asia for another great trade, and this one really became a big one. While Europe feels the stinging pain of oil, which exceeded $110 a barrel this week at almost $115 on Thursday, there are countries that have virtually no dependence on Russian oil, like Australia, New Zealand, and Canada. And the currencies of those countries have performed very well over the past week. Just as the euro was falling, the Australian and New Zealand dollars were holding firm. So we made money selling Euro Aussie, which dropped to its lowest level since 2017, on the premise that this was going to happen, that euro would feel a lot more pain, and the Australian dollar would either hold steady or at least fall less, but it actually rallied to some degree as a result of their lack of reliance on Russian oil. I probably should have pressed that trade further, but the longevity of this move, look at how long this Euro Aussie decline was. I think it was 12 straight days, made it very hard to stay into a trade with this extremely oversold pair. Even as the Russian invasion dominates the headlines, we also have important data and event risk on the calendar, like last week's Bank of Canada monetary policy announcement. The BOC was prepared to raise interest rates at the beginning of the week, and we didn't really know if it was going to be 25 or 50 basis points. I thought 25 if you read some of my notes, but the mere prospect of tightening gave me reasons to sell Euro-CAD, especially as oil prices were surging. So we made profits in Euro Aussie, we made profits in Euro CAD in this move that you see on this chart. All in all, we made 151 pips trading only 3 days last week, Monday, Tuesday, and Thursday, because I never trade on NFP Fridays. Knowing when to trade and when not to trade is just as important as finding the right trades, because you don't want to be standing in front of uncertain event risks that could sabotage your positions. I pressed the trend knowing that in wartime, sell-offs can often last longer and be deeper than we would otherwise anticipate, breaking through support after support. Bear market moves are always quicker and more aggressive than bull markets. I think that's probably one of the most important takeaways from the war trade. I also faded the rallies knowing that the end is not yet in sight for this conflict. We are now walking into a week with deeply oversold moves. So if you want someone to guide you through them and help you make intelligent trades, come trade with me at bkforex.com. Now let's take a look at some of my time-stamped trade ideas over the past week. So we made 151 pips, Kathy, day trades. Most of the money was made on Monday and Tuesday, but we did make money on Wednesday night, just kind of gave it back during the New York session. Going back up to our trades, if we scroll all the way up until when we started on Sunday, just give me a second to get there, you will see that we started off the week with 4 trades. We started off with short Kiwi yen, short Swiss yen, short euro dollar, and short euro CAD. And so I always give the charts on why we trade this. With Kiwi yen, for example, we had a very clean zip sell signal. Same story in euro dollar. This was the trade that we were looking at before. And also, we went short euro CAD. This is the chart that we saw. I provide the reasons why, fundamentals as well as technicals. And EuroCAD target was hit very quickly after we put on the trade. Kiwi yen target was hit very quickly, less than an hour. Timing is very important when it comes to trading. And the reason why I pick 8 p.m. is just as you see here, which is that market opens, it retraces that initial move. Usually there's not much happening beyond the initial flush or open. And then we get into a better price at 8 p.m. And that's when Asia comes in and the flow moves our way. Euro dollar target also hits before I go to bed. And we closed half of the Euro Swiss yen for a profit and the rest out in the morning at break even. In the New York session, we went short Euro Swiss, Dollar Swiss, Aussie Swiss. Here are the trade setups. Euro Swiss was actually a very nice one. Aussie is Dollar Swiss. We did sell a little bit into oversold, which is not great. Aussie Swiss had a nice zip buy signal. So we held on to the positions. Euro Aussie hit target. Aussie Swiss we closed. Euro Swiss we banked some profits on that as well. On Monday evening, Tuesday morning in Asia, we went short euro dollar and long CAD Swiss. CAD Swiss had a beautiful zip buy signal, which is a white candle with a green background. We also had the euro dollar zip sell signal, so very easy trace and clean setups this week. And we banked some quick profits in euro dollar, and CAD Swiss hit target as well. Then on Tuesday morning in New York, we went short Dollar Swiss, Euro yen, give you all the charts, all of the explanations, also went short dollar yen, and managed those trades a bit, and we ended up 150 pips in 48 hours worth of trading. On Wednesday night, Thursday morning, we still sold Kiwi CAD and Euro dollar. Kiwi CAD had this setup. We were in the zip sell zone below the indicator line. Same story with euro dollar in the zip sell zone, whereas before we had the zip sell signals. Woke up this morning, euro dollar and Kiwi CAD hit target. Had a little bit of bumpy trading in New York because I was also doing a trading battle, so I was very distracted, but still ended up the week 151 pips in our day trades. So that's how money is made, and that's how we meet our target of 100 pips a week trading with Zip.